So this is a 6-month look back at the South of Fifth Market, which we're in today with Stefania Cambarau, our beach agent. And we're actually going to be taking you through what's happened in the last 6 months from March through to where we are now, which is the end of September in South of Fifth. So Steph, let's talk about the market. You're an expert here, you live here, you know it, you walk it every day. What are some of the basic stats that people need to be aware of what's happened in the last 6 months?
Sure. So very first thing, we want to let you guys know that we have divided the market into 3 segments. The first one is from the, up until $2 million, which is the entry-level market. Then we have the 2 million to 6 million. And then we have properties, exceptional properties over the $6 million. What we've seen in the first segment, it's a dynamic market, actually. We've seen 85 sales in the last 6 months, representing 16 months of inventory. Absolutely not bad for the condo market.
Let's address the elephant in the room, Airbnb. Now, Airbnb has now been outlawed on the beach, and we've really noticed that this particular market is propped up by a lot of rentals compared to the number of sales. So with that in mind, with the Airbnb, obviously, if you've got a cheap unit and you're not able to do short-term rentals, what have we noticed have been the successes for sales within this sector?
There are a few buildings, really a handful of buildings that are allowed legally short-term rental, which is a month minimum. So actually, the Yacht Club is one of those buildings that has done really well because we've seen 12 sales in the past 6 months are in that building. And of course, the highest price achieved for those units are for the Bayview units. And we're talking about $800 to $1,000 per square foot. And those are still considered income producing properties. That gives us like an 11 month of inventory for that building, which is really, really healthy.
Pretty good. So when you break into it and you look at some of the reductions on the sale prices, we've been studying this and we're seeing really reductions anywhere between 10 to 20%. Really the mid-market is probably 14. Now that's not bad compared to some of the other price points as we discuss next. You're going to see some of the bigger reductions that are happening in the 2 to 6 and the 6+ range. So now let's move on to the 2 to 6 million range, of which we've seen 16 sales. Now that represents 37 months of inventory, which, let's face it, is quite a lot. And if you compare it to the rentals, there's been a sizable number of rentals compared to the sales. 112 rentals to 16 sales. So it's still definitely a very big rental market. Now, specifically, what we've seen is some pretty big reductions made within this sector. We're talking 22, 23% discounts off the original sales. But ultimately, this is a market that out of those 16 sales, we've seen half of those come out of Continuum, which is a building that we sell a lot. We know it. It's a great product, and there's a reason why it amounts to half of the sales. Yes. Specifically, give us some specifics, Steph, on some of those big sales within the sector.
When you're talking about the very discounted sales that we've seen in this price bracket, 2 of those are the 2 newer buildings. One is 321 Ocean, and one is One Ocean. And those 2 buildings, those were developer sales. So that was a product that was trying to be sold already 3 years ago. And no wonder now that I finally got into a closed sale, it's a very, very discounted price.
Yeah. What was the big one? The big one was like, how many percentage of
34% discount for the One Ocean unit.
So let's move on appropriately talking about the $6 million plus. As we walk through South of Fifth and we're walking past a blue Ferrari seems kind of appropriate. This end of the market, the really high end of the market, actually is faring better than the mid-range, the 2 to 6 million range. Why? Well, in fact, what we're seeing is that this level of product isn't so affected by some of the economic to's and fro's. We've seen 7 sales in this 6-month period, which actually, if you break it down to the amount of active listings that we have, is 29 months of inventory. Now that might seem high, but it's definitely a tick up from what we saw 6 months before when we only saw 3 sales for that period. So looking at it again, coming to this sector, tell us about some of these big sales, where they've been coming from, what buildings, and what we've noticed, Steph.
Those big sales have achieved, of course, a price per square foot that are up to $3,000 per square foot. The top two sales in this price bracket are Sale Continuum. It's a combined unit, amazingly finished. They're achieved almost $3,000 per square foot. And then another top finished product in the Portofino, in the Murano Portofino Tower, that surprisingly, it's an O1 line, and it has sold for over $4 million more, a comparable sale not renovated. So same line in the same building, 7 floors below, but not renovated. So these are numbers that show how the buyers for that type of product is willing to really pay a premium when it comes to top renovation. And there's demand for that. And again, top building, Murano Portofino and Continuum.
So I think the takeaway on this big sector is that finally we're seeing big high-end product move at a higher velocity than previously. Why? Because you've got to deal with great product, but more importantly, it's now discounted, or say reduced, back to the correct market values. Overconfidence is gone, realizations kicked in, and we have sales heavily discounted at 20-25% to sell at what would be considered true market conditions that previously, a year ago, we didn't see. So for more information, as always, email us, call us, speak to us on WhatsApp, use our chat box, and continue to read and watch our other videos on our other neighborhoods as we update you every quarter. Thank you.
Thank you.